Visual, montage of the NYSE/NASDAQ bell ringing, fast-moving green/red candles. Script, 9:30 AM Eastern. The bell rings, and millions of dollars change hands in seconds. For most traders, the first 30 minutes of the market are a nightmare of volatility and fakeouts. But for the top 1%, it's where the day's profit is made. Today, I'm showing you exactly how to trade the opening bell without getting shredded. I'm breaking down the opening range breakout, ORB, how to spot liquidity grabs, and the specific 2026 indicators you need to filter out the noise. By the end of this 15-minute masterclass, you'll have a repeatable blueprint for the most profitable hour of the day. 1:30 to 4:30. The psychology of the cash open visual. Script. Before we talk strategy, you have to understand who is trading at 9:30 a.m. It's not just retail traders on their phones, it's institutional rebalancing, hedge funds executing overnight orders, and high-frequency algorithms fighting for liquidity. This creates the opening flurry. The first 5 to 15 minutes are often irrational. This is why my first rule is, don't touch the buttons until 9:45. Why? Because the market needs to establish a range. At the open, the spread is wide and slippage is high. By waiting for the first 15-minute candle to close, you let the weak hands get washed out so you can follow the real institutional trend. 4:30 to 8:30. The strategy, the 15-minute ORB, opening range breakout. Visual, screen share of a 5-minute chart with 2 horizontal lines, high/low of the first 15 minutes. Script, the most reliable way to trade the bell is the 15-minute ORB. Here's the step-by-step. Identify the range. Mark the high and the low of the price action between 9:30 and 9:45 a.m. The signal. We are looking for a 5-minute candle to close outside of this range. A wick through the line is not a trade. That's a trap. The confluence. In 2026, we don't just trade the break. We look at VWAP, volume-weighted average price. If we break the high, but we're below VWAP, it's a fake-out. We want the break and the price to be on the correct side of VWAP. Risk management. Your stop loss goes at the midpoint, 50%, of the 15-minute range. If the price falls back into the middle, the breakout has failed. 8:30 to 11:30. Advanced 2026 tools, order flow and volatility. Visual, showing an order flow or level 2 heat map. Script. In 2026, price action isn't enough. You need to see the tape. Tools like the impact order flow indicator or volume profile help you see where the big blocks are sitting. If you see a massive sell wall just above your ORB high, that breakout is going to fail. Conversely, if you see aggressive buying hitting the offer as we approach the high, that's your green light. Also, watch the ATR, average true range. If the open is too volatile, ATR is 3 times the normal average. The risk to reward isn't there. Sometimes the best trade at the opening bell is no trade at all. 11:30 to 13:30. The gap and go versus the gap fade visual. Comparing 2 charts, one that trends upward after a gap and one that crashes back down. Script. Not every open is a breakout. Many stocks gap up or down from the previous day's close. The gap and go. If a stock gaps up on high volume and stays above the 9:30 opening price, the overnight bulls are in control. The gap fade. If it gaps up but immediately fails to hold the opening price, institutions are using that pump to sell their positions. Rule of thumb, if the gap is filled within the first 10 minutes, look for a reversal. If the gap holds for 20 minutes, look for a trend continuation. 13:30 to 1500. Checklist and closing visual. A graphic overlay of a morning routine checklist. Script. To wrap up, here is why